Going over IRS Schedule H, Household Employment Taxes. So this is the schedule that taxpayers must complete if they have one or more household employees working in their home during the calendar year and have to pay them as an employee and then pay Social Security, Medicare, federal tax, or federal unemployment tax on their behalf. So there are a couple of things that you should know because many taxpayers might have someone that cleans their house, that provides babysitting services, and they may be a household employee even if the taxpayer doesn't realize it. So the first question to answer is whether or not you have household employees. The IRS considers taxpayers to have household employees to the extent that they control not only what work gets done in the house, but also how. So for example, one of the most common questions would be, if you have a housekeeper that comes in periodically and cleans the house, how do you know that that's an employee? Well, if you have a cleaning service, or if you hire an independent contractor that can come in at mutually agreed upon times, but they bring their own supplies, they do the cleaning their own way, and you don't give them instruction other than the general instruction to clean your house, then that might not be considered a household employee. Conversely, if you give someone a checklist of all the things that they need to do, and then you give them cleaning supplies, and then you tell them when to show up, how long they should stay, and you control other aspects of their employment, then you might have a household employee. So the first thing you should do is really understand who's working within your house and what role they play, whether or not they're an independent contractor, whether or not they're a household employee. And the big difference is with an independent contractor, they are responsible for paying their Social Security, Medicare, and unemployment taxes, whereas if you're the employer, then you have to pay them on their behalf. So we'll get into this nuance of the tax form, and the first three questions at the top of the tax form actually help you understand whether or not you need to actually file Schedule H for household employees. So what we're going to do is we're going to go to the top of the form, and our hero, John Doe, he has a Social Security number. This is attached to his tax return. The one thing that you need to know as an employer, if you are considered to have household employees, is that you need to have an employer identification number. So this is not your Social Security number, and if you do not know or have an employer identification number, you can get one in as easily as 5 to 10 minutes simply by applying for one on the IRS website. You can also file Form SS4, which is a request for an employer identification number, but that could take anywhere between several weeks to several months, depending on how you file that form. So we're going to go and start at the top of the form. Fortunately, our hero, John Doe, has already filed for his employer identification number. There we go. So now these three questions at the top of the form will help you determine whether or not you need to file Schedule H with your tax return. So did you pay any single employee cash wages of $2,400 or more in the tax year? So the easiest way to answer that is whether or not you paid someone an average of $200 a month or more if you employed them for the entire year. So you don't count a spouse, you don't count your child if your child is under the age of 21, you don't count a parent, and you don't count any person that's under the age of 18, like a teenage babysitter. So if you did not, you would go to line B. If you did, then you can skip the rest of these questions and start completing Schedule H right out of the gate on line 1A. So for John Doe, we're going to say no. Then the next question, question B. Did you withhold federal income tax for any household employee? Generally speaking, you do not need to withhold federal income tax for a household employee unless the employee requests you to and they give you a completed Form W-4. So Form W-4 is basically the employee's instructions to their employer on how much federal income tax they should withhold every pay period. So if you didn't receive a W-4, you didn't withhold or pay federal income tax, then you can go to line C. So line C is, did you pay total cash wages of $1,000 or more in any calendar quarter of either the previous year or the current year to all household employees? So, if you have like a landscaper and a nanny and a housekeeper, odds are probably pretty high that you paid total cash wages of at least $1,000 or more over the course of any one quarter. Now, if the answer to all of these questions is no, then you don't need to complete Schedule H, right? So if you say no, then you would just stop. We don't need to file this schedule. So, but depending on if you answer yes to any question, then you're going to have to complete at least part of Schedule H, if not the entire thing. So if you paid someone at least $2,400, even one person, then you have to complete all of Part 1, which talks about Social Security, Medicare, and federal income taxes. And you need to report the amount of taxes that you've collected and remitted on their behalf. If you did not pay anyone those wages, but you did withhold income tax, then you would go to line 7. You would start reporting on the income tax that you withheld, and you would proceed accordingly. And then if you did pay total wages of $1,000 or more, but you answered no to the other questions, then you would skip all of Part 1 and you would start at line 10, which is Part 2. So now that we've completed this, we're going to just assume that our hero John Doe answered yes to question A. He happens to have one housekeeper, and we'll just say that he pays that housekeeper $3,000 a month. Okay? So total cash wages subject to Social Security would be $36,000 per year. But before we go too much further into Part 1, I do want to illustrate the other parts of the form. So Part 1 is where we calculate Social Security, Medicare, and federal income tax. Part 2 is where we calculate federal unemployment tax. Part 3 is where we total out all of the taxes and determine whether or not we're required to file Form 1040. And then Part 4, you only need to complete this part if you don't file Form 1040, and you have to file this form on its own, in which case you would also need to sign it under penalty of perjury. So if this is part of your overall tax return, you don't need to complete Part 4, but we'll walk through all of those steps. So in line 1A, we entered total cash wages subject to Social Security tax. In line 1B, we would calculate qualified sick and family leave wages that were paid in 2022 for leave that was taken after March 31st, 2020 and before April 1st, 2021. So there was a relative reshaping of household employment taxes when it came to the federal government's response to the coronavirus pandemic. And one of the provisions of the CARES Act was that employers were allowed to defer the deposit and payment of the employer's share of Social Security tax. So a lot of these calculations are basically adjustments that were made based upon that. So I'll talk through those situations, but just know that in future years, a lot of these items will kind of drop off and become a little bit more simple. And for this walkthrough, we're making the assumption that John Doe hired his household employee on January 1st, 2022, hired that person for the entirety of the tax year, but did not have any employment in 2021 or 2020. So a lot of these questions we're going to answer 0 to, just for illustrative purposes. If you do need to revisit wages that were paid in 2022 for either leave, whether it was qualified sick leave, qualified family leave, that was taken either in 2020 or 2021, then you can check out our article that walks you step by step through that process. So we're on to line 2A, where we're going to calculate this $36,000 by 12.4%. And we come up with 4464. In line 2B, we would enter the employer share of that Social Security tax on that qualified sick and family leave. So if 12.4% is the total Social Security tax obligation, half of that, 6.2%, is the employer's responsibility, 6.2% is the employee's responsibility. So in line 2B, we would be backing out the employer's share of that, and then we would subtract it in line 2C from that total. And then total cash wages subject to Medicare tax. Fortunately, we don't need to make that adjustment on Medicare tax. It's a straight calculation. Instead of 12.4%, it is 2.9% across the board for all wages. So in line 1A, you'll need to take into consideration that there is a Social Security wage-based limit. And for 2022, that limit is $147,000. So what that means is the amount of Social Security tax is capped that you have to pay at. The cap is at $147,000. So you'll pay Social Security tax all the way up until wages hit $147,000. After that, there is no more Social Security tax for that tax year. So every year the wage limit increases, the wage base limit. So in 2023, I believe it's $160,200 or something like that. But for 2022, it was $147,000. So if this were $360,000 of wages, we would then back that out and say it's only $147,000 that we're paying Social Security tax on. So that's how we would do that. In line 3 for Medicare, there is no such limitation. So we include all of those wages and then we multiply by 2.9% instead of 6.2%. So that's 1.45% for the employer side, and 1.45% for the employee side. Now, in line 5, we'll enter any total cash wages subject to additional Medicare tax withholding. So as an employer, if you pay any single person more than $200,000 a year, then you would need to enter the extra amount, any amount above $200,000 per person, into line 5. Since we have one employee who earns $36,000, we have no obligation to report those cash wages. But if we put in $10,000 here for an employee that made $210,000, then in line 6, we would multiply that amount by 0.9%, not 9%. It would be 0.9%. So, for example, this $10,000 would then become $90, right? So in line 7, we did not withhold any federal income tax, but if you did, you would report it here. And then in line 8A, we're going to add all of these lines. So line 2C, 4, 6, and 7, and that's going to represent our total Social Security, Medicare, and federal income taxes. And that amount is $55.08. Okay, so lines 8B and line all the way through 8N are adjustments that employers would need to take for tax credits that they're entitled to based on wages that were paid to employees during certain portions of the coronavirus pandemic where they were eligible to take leave. The employer is able to take a tax credit to offset the cost of paying those employees while they were on leave. Now, in our situation, our employee started work after October 1st, 2021, so we will fill in none of these areas. But if you did have to, we'll walk through really quickly. 8B and 8C are non-refundable portions of this tax credit for leave taken either before April 1st, 2021 or between April 1st, 2021 and October 1st, 2021. So you can find more detail in the form instructions or in our article. So since we are not claiming a tax credit for these wages, we're simply going to enter this number on line 8D as the form instructions say, and we'll go to line 9. So 8B and 8C are non-refundable portions of this tax credit. 8E and 8F is the difference, so it's the refundable portion of that tax credit. And then 8G and 8H, 8I and 8J, 8K and 8L, 8M and 8N are different ways to stratify different types of wages that were paid at different points. So 8G and 8H is for qualified sick leave wages for leave that was taken before April 1st of 2021. And then 8H is the health plan expenses that you can allocate to those wages. 8I is for family leave wages for leave that was taken before April 1st. 8J is for the health plan expenses associated with those wages. And then 8K and 8L are for sick leave wages taken between April 1st, 2021 and before October 1st, 2021. And 8L would be the associated health plan expenses. 8M is for family leave wages taken after March 31st, 2021 and before October 1st. And then the health plan expenses associated with that would go into line 8N. So in line 9, did you pay total cash wages of $1,000 or more in any calendar quarter? So if you did not, then you would simply stop here. You would include this on from 8D amount on Schedule 2. This is an additional tax, line 9. You could include items from 8E and 8F, the refundable portions of these tax credits as applicable. So in this case, it's clear that we did pay total cash wages of $1,000 or more in any quarter, so we're going to keep on moving. So now we're in part 2, which is the federal unemployment tax. Generally, household employers do not need to pay unemployment, generally speaking, the federal unemployment tax only applies to the first $7,000 of income for each employee. So there is a base unemployment tax rate that can be offset by credits earned by paying into a state unemployment tax system. For example, John Doe lives in Texas. If he's paying into the state of Texas's retirement system or unemployment system, then he would be able to offset a significant amount of this federal unemployment tax because he's already paying it into the state tax system. So you'll complete questions 10 through 12. If you check yes to all of these lines, then you'll go to section A. If you check no to any of these lines, then you'll need to skip section A. You'll go to section B. But generally speaking, you should not be completing both section A and section B. It is one or the other. Section A is a little bit more straightforward. We'll do the actual calculations here, and then we'll kind of lightly walk through everything in section B. So let's see. We paid to only one state. Did we pay all unemployment contributions by April 13th? So if you paid everything on time, and for fiscal year tax filers, that means whenever your tax return due date is, if it's not April 15th of the tax year. In 2023, that due date was April 18th because the tax filing deadline fell on a weekend. And then whether or not all wages that were taxable for federal unemployment were also taxable for your state unemployment. So if you check yes to all of those boxes, you would complete section A. But if you check no for anything, then you would have to do section B. So for question 10, if you paid contributions to a credit reduction state, you would need to see the form instructions. A credit reduction state is a state in which they have not repaid the federal government all of their unemployment tax assistance money that the federal government paid to them. So you may have to pay federal unemployment tax and then turn around and pay your state unemployment tax as well. So yeah. In section A, we'll just outline John Doe. So he paid Texas, and he made, let's just say the Texas tax rate was the exact same. It was 6% or 0.6%. So let's just say he paid $216, and you have the total cash wages subject to federal unemployment, which is the entire $36,000. You would multiply line 15, and you get this, right? So Now, if you needed to complete section B, like if you have more than one state, let's imagine that instead of Texas, it was California, which actually is a credit reduction state. Then we would need to complete these lines right here. Now, some of this information you would have to get from your state unemployment office, things such as the state experience rate. Generally speaking, you won't be able to get that information from the IRS website. Let's just say the experience rate was 6% or higher. You would need to multiply, then you would need to complete columns C and D. If you were given an experience rate of 5.4% or higher, you have to complete C and D. If it was less than 5.4%, then you need to complete everything. So basically, you would get to right there, and then you could enter. I'm not going to do these calculations, but if we had a different experience rate, we would enter that here, and then we would walk through this entire calculation. Because basically what you're trying to do is figure out the difference between your federal tax responsibility and what you paid to the state, and then you'll owe the federal government the difference, and you'll get credited the amount that you paid to the state. So in here, we're going to enter the 216. So as you can see, you would, if you were in a credit reduction state, sorry, on line 23, if you're in a credit reduction state, or if you made late contributions, you actually need to use one of the worksheets in the form instructions. And what would happen is you would complete the worksheet, and then whatever the worksheet generated, you would use line 23. You would put that information into line 23, and then you would subtract that line 23 amount from line 21. That would be your additional federal unemployment tax. So unfortunately, because we cannot, it's a little bit difficult to see exactly. Well, all right, I think I can do this. So on the worksheet 2, which is the household employers, since we're using California as an example, they have a reduction rate of 108 or 0.03%. So we're going to enter this amount here. And we end up with $108, and then we would subtract line 23 from line 21. Because we don't get the full amount of the credit from California, the federal unemployment tax responsibility is going to be a little bit different because of this. So again, you would need to go through the form instructions and use the appropriate spreadsheet to perform this calculation based on the state that you're in. And then these worksheets, you don't need to file them with Schedule H. You would simply keep them with your retained records in case you're audited. So in part 3, we're going to calculate the total household employment tax. If you checked yes on line C, which is whether or not you paid $1,000 or more to all employees, then you enter 0 here. And since we did, we're going to enter 0. For line 26, we're going to add either line 16 or line 24 to line 25. And of course, we're using the top, which is 216. And then if you're required to file IRS Form 1040, if you're just filing a normal tax return, then you can stop here. You'll include this amount on your Schedule 2, line 9 as an additional tax. If you had any amounts on line 8E or 8F, you would enter them on Schedule 3 as a credit, as a non-refundable credit. Sorry, as a refundable credit. Refundable portion of these tax credits. So if you say no, because you don't normally have to file an income tax return, then you would need to enter your address and sign the bottom of this form under penalty of perjury. So simply, let's see. There we go. So that's all we have for Schedule H. And again, probably some of the more key aspects are completing either Section A or Section B under unemployment tax, but not both. And then understanding that a lot of this first section really has to do with employers who had employees taking leave, either qualified sick or family leave during the certain portions of the coronavirus pandemic, and then making those payments for that leave taken in tax year 2022. So for a lot of people that file Schedule H, this might actually be much simpler than the form indicates. We cover all of this in our article, which you can find on our website. Simply go to teachmepersonalfinance.com and type in IRS Schedule H in the search bar, and you should see our article. Or you can click the hyperlink in our show notes, and it'll take you right there. If you like our articles, please subscribe to our newsletter. And if you like our YouTube videos and our tutorials, please subscribe to our YouTube channel. And if you have any questions or comments, as always, please post them in the comments section. Thank you very much and have a great day.